it's a set of numbers that started being put together by the industry. It was the investment discussion group of the Association of Superannuation Funds of Australia, or ASFA, and it was really about putting something together to help people focus on the long term. We see short-term numbers all the time, even daily. This study is unashamedly about the long term and what superannuation funds have achieved as investment results over that period. We've experienced any number of extreme situations over the course of this study. We had the oil crisis in the 70s, we've had the 1987 stock market crash, we've had the 2000 tech wreck, and more recently we had the financial crisis. Really, even if you invested, if you look at this study, your money would have been worth around $118,000 at 30 June 2007, just before the crisis. Over the next 2 years, we saw that number fall to $95,000. And clearly, a lot of people were very worried at that particular point in time. But if you just left your money invested in that strategy, the strategy that got you to $118,000, went down to $95,000, at the end of 2015, that money is now worth $165,000. Even if you invested all your money just before the financial crisis, you've got more money today than you had when you put that in, albeit you experienced one of the most significant drops in financial markets in our history. You've still made that money back. So as I said, it helps to smooth out some of the noise that you get on a year-to-year basis. So if you started with $1,000 invested in 1962, that has now grown to $164,000 in nominal terms. If you were to look at the impact of inflation and take out inflation, that $164,000 would drop to around $12,000 or $13,000. So here's the first tip. Don't forget inflation, particularly in superannuation, particularly over longer time periods. It's going to have a big impact on what you actually have to live on at the end of that stage.